Continuing there have been some worrying new figures for the economy, though, haven't there, Stephen?
Yeah, we've been getting signs for some time now about this slowdown in Chinese economic growth. New figures showing that producer prices in China were down 2.2% in October. That's the 32nd month, so almost 3 years of falling prices at the factory gates for Chinese producers. Now, that's thought to be down to overcapacity in many sectors of Chinese industry. Inflation in consumer prices, meanwhile, remains steady at 1.6% growth year on year. That's well below the government's target, though. This news coming after the Chinese president tried to play down the risks of a slowdown in economic growth.
In this new normality, China's economic growth rate may be slower, but its real growth remains considerable. The size of the Chinese economy is no longer what it used to be after more than 30 years of rapid economic growth.
Plenty of business deals being done at the APEC meeting. Russia's Gazprom has signed a new deal to supply gas to China worth more than $300 billion. It's the second major gas supply agreement between the two countries done this year. The deal a boost for Russian President Vladimir Putin, whose regime has been under fire for its involvement in the Ukraine crisis.
Another deal that's been done now on the Chinese markets.
Yeah, an agreement's been reached finally to link the Hong Kong and Shanghai stock exchanges. Now, the move will make it easier for global investors to buy shares in mainland Chinese companies. The exchange will begin on November 17th. It had been much awaited by traders, and the news certainly helping the Chinese markets today. We've seen both the Hong Kong Hang Seng and the Shanghai Composite rise pretty significantly, as you can see on the back of that news. Not such a great picture in Japan, though. The Nikkei in Tokyo closing down, this after the rising value of the yen hitting exporters.
Now, tomorrow is a massive day in the calendar for online shopping in Asia. Explain this to us, Kate.
It's Singles Day, which was created in China by young people to celebrate their single status, but it's transformed into a massive retail event, and it's the biggest day in the year for the online retail giant Alibaba. It was worth $5.8 billion to the company last year, expected to be worth even more to them in sales this year. And as people stay single for longer, many Asian economies are seeing a shift too in consumer spending. Olivia Salazar-Winspear has been looking at the power of one in South Korea.
In her grandmother's time, Kang Hee-young might have been a rarity. A 35-year-old single woman happy with her self-sufficient lifestyle.
I have more time for myself, and I can invest in myself more reasonably than married couples around me.
Free to spend her time as she pleases, and her money too. She's one of a growing group of single-unit households in South Korea. Asia's fourth largest economy has been swift to seize upon the market. Samsung Electronics launched a scaled-down slimline refrigerator this year. Their competitors have come up with small-load washing machines and compact domestic appliances. Ready meals for one, already a staple in the West, are now a popular choice for those happy to outsource their dinner.
We have developed packaged foods for single people, especially for office workers and college students. The sales have increased significantly, especially in convenience stores.
While the consumer goods market in South Korea is in a slump, the market for singles has rapidly increased, especially the market of processed food for singles, which has grown 15%, whereas the domestic consumer market has only grown 5%.
One-person households are expected to make up 35% of South Korea's population in 20 years' time, and experts estimate their spending will top $100 billion, suggesting the market for this demographic has healthy years ahead of it.
Yeah, fascinating story that. Enjoyed that one. Finally, some good news for the music streaming service Spotify, Stephen.
Of course, we have been discussing last week how Taylor Swift had pulled her music from Spotify, but a new industry study has found that artists in Europe anyway are actually making more money from Spotify than they are from iTunes. And the company called Cobalt, which collects royalties for a whole range of artists, including Bob Dylan, Lenny Kravitz and Maroon 5, said that Spotify brought in 13% more revenue for its artists than Apple's music music store in the third quarter. Now, streaming accounts for around 10% globally of revenues for artists who are signed to the Cobalt deal. In Europe, though, now it now accounts for more than 50%. It's a really big shift in the music industry.
Certainly is. Make sure you're on Spotify. That's the answer to that one. Stephen, thanks a lot. Stephen, with that business, more from him, of course, in an hour's time. Now, nighttime trick shots coming up in web news. Tis a bit bizarre in video of the day. It starts, though, today with the matchmaking app Tinder being used to raise awareness about sex trafficking.
The Immigration Council of